It's a sad day for all investors because Warren Buffett has announced that he is retiring from leading Berkshire Hathaway. But bear in mind that he's 94 years old this year, so I think he deserves the break, right? So I am a bit late covering this news because obviously you can see that this was on Saturday, 3rd of May, right? But today is the 6th of May and I'm only covering it now, right? But my main intention for this video was to make a HIMS and also a Palantir earnings video. But obviously I couldn't forget about Warren Buffett, the GOAT, right? So what happened after he announced his retirement? Basically, Berkshire stock is down 5 point something percent, right? Which is quite crazy because I imagine that obviously it's a big, but then again, what did Berkshire Hathaway investors expect, right? This guy, are you going to expect him to work until he's 100? So potentially some investors are just selling out because the whole investment thesis is, I trust this brilliant old man and I hand him my money, right? So some investors may be selling because of that. So hopefully Warren Buffett is just a bit tired or whatever it is, right? Hopefully it's nothing health related because sometimes when they announce retirement like this, obviously his age has something to do with it. But sometimes when they announce retirement like this, I think it's some health issues or something like that. So touch wood that that's not the case. And let's take a look at some of the craziest, basically most aura Warren Buffett stat, right? So this has to be the best Warren Buffett stat out there. Annual return since 1965, Berkshire is 20% and S&P is 10.4%, right? And I said here, he's really a different breed, right? Because you can see that if Berkshire stock dropped 99%, it still outperforms the S&P, right? So definitely someone that you wanted to handle your money, right? And next, when we take a look at the cash pile, is 348 billion. And he did mention that obviously if he saw any opportunities, he would swing at them, right? But obviously maybe he has felt that there wasn't any opportunities as of late, right? So next, we're going to talk about Palantir as well as HIMS earnings. So for Palantir, I'm just going to go through surface level because I think the valuations have been stretched so far that I don't think you can say any justice that, oh, because of the earnings report or anything, because I actually went through the earnings report and the earnings report was fantastic, right? So I actually have positions in both Palantir and HIMS. So for Palantir, I've basically been selling options to gain IV, right? Because it's a very volatile stock and you can harvest a lot of yield on the options, right? And for HIMS, I have been selling options as well, but I was selling options somewhere around here, right? Basically, these were cash secured puts, and then obviously after it skyrocketed, all of it expired out of the money, and basically I got to collect all the premiums, right? So when we take a look at Palantir, it's actually down nearly 10%, right? Including today's downward move. And you can see that they actually beat earnings, but this is just a small baby beat, right? You can see 1%, 2%. And in previous quarters, they were beating by 23%, they were beating by 10%. So it's really a nothing beat, right? Because everyone has priced in so much to the stock. That's why you can see even when they meet or beat earnings, the stock is still down, right? So I think one lesson to take from that is, even though that's a fantastic company, you cannot buy it at any price, right? Because obviously, in the long term, maybe the price will recover from this, but in the short term, can you take it that the price goes down 50%, which is what happened very recently with Palantir, right? Let's take a look here, Palantir. So you can see that actually it went down 50%, just like this. And then after that, it recovered the whole thing. So you might say, right, oh, obviously, if whatever price that I'm buying here, then this 50% drawdown and it'll recover anyways, right? But I think if you didn't go through this drawdown, right, I don't think you understand how psychologically painful it is to go down this drawdown. And now when the stock rebounds, all you get is basically you get back to break even, and then they report earnings and the stock is somewhere here, right? So yeah, be careful if you're buying this high price name, right? So next, we're going to look at HIMS earnings. Actually, a very big beat on earnings, 24% on EPS. So revenue really wasn't that much of a beat because everyone expects HIMS to beat earnings, right? Because nobody's really that surprised when HIMS comes out and beats earnings because they sandbag a lot. So actually, I've prepared a HIMS earnings report, basically presentation, right? And if I take a look at the earnings report, a lot of things to like about the numbers, but I have a few things that I don't like, right? So you take a look at revenue, net income, adjusted EBITDA, which I don't really look at, operating cash flow, free cash flow, subscribers, and also the monthly online revenue, right? These metrics beat all by a very nice margin, right? You can see revenue up 111% year over year. Where do you see any companies growing revenue 111% year over year? Net income 345%. This is not a huge unexpected thing because they are just turning profitable, right? So obviously they can still churn out this kind of numbers, right? Adjusted EBITDA 182% year over year. Operating cash flows and free cash flows is what I'm focused on. So I think free cash flow is a bit lower than I expected, but operating cash flow is perhaps the thing we should be using, right? Because free cash flow obviously doesn't take into account maintenance capex, right? So if it's running at a maintenance capex, I think the number will be closer to the operating free cash flow, right? But as of now, it's about 45% of the operating cash flow. So you can use both operating cash flow and free cash flow, right? Depending on the type of company that you're analyzing, right? So if you take a look at subscribers, very good, 38% year over year, and this monthly online revenue, right, is up 53% year over year. So overall, a lot to like. And then when you take a look at the 2030 revenue guidance that they gave, it's 6.5 billion at least, right? And then adjusted EBITDA of 1.3 billion at least, right? So next slide, when we take a look at the share of total subscribers using personalized solution, it's still going up a lot, right? And I think this is where HIM's moat is going to come from, right? It's not going to come from selling the generic stuff, right? Because the generic stuff any pharmacy can sell, or any online pharmacy like Roman Life MD also can sell all these things, right? But when you take a look at all the personalized solutions and how fast it's growing, I think this is where I would say most of the moat is going to come from. And then when you take a look at subscriber growth of 45% for men and also 170% for hair loss, right? I think this is the part that I highlighted, because you can see for men it's actually decelerating, right? So I think one part of the men growth rates, why it isn't as fast as women's, obviously one is men is coming off a bigger base, right? And women's are coming off a smaller base, right? So I think that is one of the reasons. So I actually expect, based on the gender category, women's to grow faster eventually, right? Even though they start with the same base. Let's say now men is starting at 200 million and women is starting at 100 million. That's not the actual numbers, right? But obviously, men is going to grow slower, right? Because the revenue base is bigger, right? But even if it was 100 million and 100 million, right? I would expect the women's base to grow faster, because women just take better care of themselves than men, right? And then next, when you take a look at the weight loss offering, 300% year over year in the first quarter, I think a lot of people will try to say that if the GLP solutions were removed and all of that, it wouldn't be damaging to the HIM's thesis, right? But I think, in my opinion, it's quite damaging to the HIM's thesis, right? So next, if we take a look at this, additionally in April, a long-term collaboration with Novo Nordisk to expand affordable access to proven obesity care, right? As a first step, these individuals can, okay, I'm not going to read the whole thing, but basically what this sentence is trying to say that they have the partnership with Novo Nordisk. And then the last part that I want to highlight, right, is that we are developing a broader roadmap together with Novo Nordisk, as well as a blueprint for future partnerships, right? And I think this part is a very important thing that HIM's management keeps trying to highlight, right? Because this isn't a one and done thing, right? So I think, in future, I think HIM's will basically have access to most of the Novo Nordisk catalog, and they will use HIMS as a distribution channel, right? So a lot of people have been saying, oh, HIMS and Novo Nordisk, they are competitors, right? So first of all, I hate to burst the bubble, but HIMS is not even in the same like league as Novo Nordisk, right? Novo Nordisk is about a few $100 billion company, and HIMS is like a I think now it's like a $9 billion company, right? So I don't see how people can say that, oh, the market is so small that, you know, Novo is trying to push down HIMS or something like that, right? Obviously, if they were in direct competition, which this proves that they are not, right? Because HIMS is more into distribution and Novo is more into compounding, as well as discovering new drugs and also issuing patents and stuff like that, right? So next, when we take a look at the guidance basically remained the same, right? Except for this adjusted EBITDA numbers, they increased it, right? So I went through all this quite in detail in my last HIMS video, so I'm not going to go through it so detailed, right? But basically the revenue is the same, right? And this is a bit disappointing to me, because I would expect if they can sell the weight loss stuff again, that their projected revenue would actually increase, right? Because a lot of our assumptions is based off this revenue having nothing to do with basically GLP-1s, right? Because after the first quarter or something like that, we already knew that HIMS cannot sell GLP-1, right? So basically, if they didn't ink this deal with Novo Nordisk, right, I think the growth rates would be absolutely tanking. So basically, I think I'm quite glad that they inked the deal, and also if they are showing us that they can only maintain the same guidance, I think if they didn't ink the deal, this stock would be down the gutter, right? So next, when we take a look at the next thing is global expansion, right? So I think HIMS has talked about this UK business doing really well, and they have the ability or the chance to scale the UK business. So they are looking to other geographical areas, right? If you're enjoying the video so far, do help me smash up the like button, hit subscribe, and also hit the bell button. This will help out the channel immensely, and I thank you very much. So I'm going to start with the good, and then I'll go to the bad of global expansion, right? So the good, obviously, you can get more revenue, right? Because there's more people living out of the US than only in the US, right? But I see a few drawbacks with this, right? Obviously, eventually, HIMS had to expand globally, but there are only like 2.4 million subscribers compared to the US population of 300 something million. So I don't see what's the rush of getting into this, right? Unless this is a sign that the US business cannot grow this quick anymore, right? Which I don't think so, right? Because I think 2.4 million, there's still a lot more people that needs all these healthcare solutions compared to just 2.4 million people, right? But maybe they see something else. So I think the bad things about global expansion is that there's different laws in different countries, right? So obviously, some things that you practice in the US, you might not be able to bring over. Obviously, the advertising stuff, they can all bring over, right? But how you prescribe the drugs maybe is something different. And then the second thing is obviously, other countries might have lower margin profiles and lower profitability, right? Because some of these countries may have a lot of like drugstores or whatever that sell discounted drugs, and maybe it's not a insurance complex like the US is, right? And that was one of the main selling points for HIMS, right? They are trying to destroy basically this whole insurance complexity issue, right? So when we take a look at the next thing is GAAP operating expenses, right? And you can see main thing that I wanted to see is marketing actually going down a bit. So marketing expenses are obviously top of mind of all the best as well as HIMS investors, right? Because obviously we don't want to see too much marketing spend if they're not acquiring a lot of customers, right? And I think one thing I want to mention is I'm quite maybe a bit disappointed, not like very, very disappointed, but a bit, because they did have a Super Bowl ad this quarter, right? And they actually added subscribers slower than previous quarters, right? So that is a bit concerning to me. But I do want to say that how advertising works is not the first exposure and then you will go and buy the thing instantly, right? Maybe the Super Bowl ad was the first exposure for a lot of people, and over the subsequent months when they advertise, oh, I've seen this at the Super Bowl, right? Must be a very reputable company, so I might subscribe to some of their solutions, right? So that is one thing that we can think about. So next is gross margins decrease, right? I'm very, very unhappy with management on this point, right? Because you can see that gross margin decreased 900 basis points, 9%. Year over year in the first quarter. So this is not why I'm angry, right? Because obviously I think this is because they are selling GLP-1s, obviously the margins are lower, stuff like that, right? That's fine, but how come they don't include it on the first page, right? Gross margins is one of the most important key financial items, right? So I think they didn't include it because the number isn't good, right? And I can see that all these numbers are only the numbers that they were expected to beat on that are on here, right? So all the numbers that they basically didn't do well on, maybe they don't want to put it on the front page, right? And I get that, but at the same time, it feels very deceitful to investors that don't dive a bit deeper, as well as a bit, I feel like it's a bit dishonest, but I don't think it's like a deal breaker to me, but it's a bit of a red flag for sure. So lastly, HIMS and Hers appoints a former Amazon executive Nader Khabani as COO, right? I think this is a very, very good news because he was actually at Amazon for about 20 years, right? So this is very good news for hiring, right? I think this is a point where Hims is transitioning from like a small company, right, to maybe a medium or bigger size company, right? And this is what you need to do, right? You need to get more experienced people. So because different companies have different life cycles, sometimes the upper management leaves and then people are like, oh, why is this upper management leaving? As Hims had that happen, right? A few weeks ago, actually, one of the upper management left, and then now they are appointing another more experienced upper management person, right? So last thing I really want to talk about is actually some of the Hims chart, because everyone loves charts, right? Who doesn't love some astrology for men? So I'm going to take a look at this chart because I've drew some things on it and I want to make a few points, right? You can see the run up here, right? Totally, I feel like it was not very sustainable. It's a 200% move in 40 days, right? And this was where it was all over YouTube. Oh, buy Hims, stuff like that, right? So that's why I mentioned in the Palantir segment that you can't buy everything, even though it's a very high quality business, right? Even though I feel like Hims will eventually break this all-time high. If my cost basis is like $70 or even like $60 right now, I'll be quite unhappy, right? I'll still be sitting at 33% losses, right? Which is not really a good place to be sitting at, considering the stock is up 60% in the past few weeks, right? And at this point, you'll be down like 66%, right? And can you mentally handle that? And will you be adding shares at that point? Or will you have bought here, and then run out of money, and then you just watch the stock go down and then go back up? So I think that is one point that I wanted to make, right? As for a future price action, I think this is what's going to happen in the next few weeks or months, right? Because you can see that actually it has a quite parabolic move, and I foresee that after earnings actually is going to trade sideways for a while, right? How long will it trade sideways for? That I have no idea. So you can see that the earnings move is pretty much nothing, right? Which is quite relieving for me as a Hims investor, because actually it moved a lot, right, over the past few weeks. So I was expecting either it would have a huge move out or a huge move down, but you can see that it was a 2.6% up and then 4 point something percent down, right? Which a 2% retracement after a crazy move like this is nothing to be scared of, right? So if it consolidates over the next few weeks or months, so I don't think anyone will be complaining too much if they bought here, right? Because you can see that obviously it can't just move like straight line up like this, right? This happens very rarely, right? It's not every day that you get this, right? Even though Hims is a very volatile stock. So next, I want to take a look at the Hims actually Google Trends, right? And I want to mention this because actually a few days ago when I looked at it, this projection was actually somewhere here. They expected it to go back down to 40 something, right? And now after earnings, you can see that it's up to 70 something, right? And that's a very good sign because of the short interest, right? Because the short interest is very, very high, right? So if there's anybody talking about short squeezers again, I don't know, some big figure that come out and talk about a short squeeze, like I feel like this is a far-fetched theory and you should be invested for the fundamentals, right? But it obviously helps that 31% of the shares is actually shorted, right? That is the float, right? And if something were to happen, like some positive news, like Eli Lilly basically partnership, or someone that is known for in the retail crowds for a short squeeze, right? I think the main name that we're thinking of is all obviously Roaring Kitty, right? If they buy shares, oh, this stock is gonna go crazy, right? And then we'll be hearing about short squeeze 2.0, and I think that's the reason you saw this move in the first place, right? This was, I think, a short squeeze, right? Because I don't see any reason the stock would move like this, right? This is absolutely parabolic move in 40 days, right? 200% in 40 days. That's crazy move, right? And the last thing I want to mention is that from this price and this price, the fundamentals have arguably been much better here, right? Because here we were talking about, oh, is Novo Nordisk going to sue, stuff like that, and we didn't even know about this earnings, right? So now the earnings is better. Novo Nordisk is most likely not going to sue, and the stock is lower, right? So obviously, one of two things have to be true, right? Either the stock is somewhat wrong here, or either the stock is somewhat wrong here, right? So I think, in my opinion, the market was quite exuberant here, right? Everyone was talking about it, and I think sometimes this is why you have to sell some stocks, even though you see the long-term potential, right? Because short-term, 200% move in 40 days, that's a good time for you to take some profits. Then when it pulls back like this, look, it's not a small move, right? This was a 66% drawdown, right? So if you sold your shares here, basically you have 3x the amount of shares if you bought back at the lows, right? Obviously, I'm not saying that you can sell everything at the top and buy everything at the bottom, but I'm just putting out that information just for reference, right? So before I end this video, I want to give a huge shout out to Him's House. Actually, this is one of the leading information for Him's updates and stuff like that, right? They do give a lot of really good information and really good takes, right? Because I believe they have some of big investors in Him's as well, right? So I think there's an incredibly good information source. Obviously, they don't need my shout out because they are obviously a much bigger channel than me, and they even had like Andrew Dudum and Martin Skrelly on their YouTube channel, and I have a few hundred subscribers, right? But obviously, this has been a huge, very helpful resource. And this has also been a great community to discuss HIMS related topics with, right? Because obviously you don't want to be in an echo chamber, but during that time in April where the stocks were just going down and down and down, damn, you needed some copium, and the community was there for each other, right? So anyways, that's about all I wanted to share today. If you did enjoy the video, do help me smash up the like button, hit subscribe, and also hit the bell button. With that being said, have a fantastic day ahead, and peace out.